What if you could invest in 300 Australian companies or 100 of America's biggest tech giants with a single trade? That's exactly why ETFs have become one of Australia's most popular investment products. In fact, Australian ETFs now manage well over 250 billion Australian dollars in assets, as more investors move away from expensive, actively managed funds toward low-cost index investing. But with hundreds of ETFs available, which ones actually deserve a place in your portfolio? Let's count down the 5 best ETFs in Australia. One ETF isn't automatically better than another. Some focus on Australian companies, while others invest internationally or concentrate on high-growth sectors like technology. The best choice depends on your investment goals, risk tolerance, and time horizon. Let's begin. Number 5. iShares. Core S&P /ASX 200 ETF IOZ. Starting our list is the iShares Core S&P /ASX 200 ETF, commonly known by its ticker IOZ. This ETF tracks the S&P /ASX 200 index, giving investors exposure to Australia's 200 largest listed companies. Its portfolio includes major names like BHP, Commonwealth Bank, CSL, and National Australia Bank. One of its biggest advantages is its low management fee of around 0.05% per year, making it one of the cheapest ways to invest in the Australian share market. However, because it only invests in Australian companies, investors don't receive international diversification. Number 4. BetaShares Australia 200 ETF A200. Next is the BetaShares Australia 200 ETF. Like IOZ, A200 follows Australia's largest companies, but it stands out because of its extremely low management fee of just 0.04% annually, one of the lowest in Australia. Performance between A200 and IOZ is usually very similar, so the decision often comes down to fees and personal preference. If your goal is simply to track the Australian market at the lowest possible cost, a 200 is an excellent option. Number 3. Vanguard MSCI Index International Shares ETF VGS. Taking third place is the Vanguard MSCI International Shares ETF, or VGS. Unlike the first 2 ETFs, VGS invests in more than 1,300 companies across developed markets, including the United States, Europe, Japan, and Canada. Its holdings include global leaders like Microsoft, Apple, Nvidia, and Amazon. This international diversification helps reduce dependence on Australia's economy while giving investors exposure to some of the world's largest businesses. The trade-off is currency risk, as overseas investments can fluctuate with exchange rates. Number 2. BetaShares NASDAQ 100 ETF NDQ. Just missing the top spot is the BetaShares NASDAQ 100 ETF, better known as NDQ. This ETF tracks the NASDAQ 100 index, providing exposure to many of the world's biggest technology companies, including Apple, Microsoft, Meta, Alphabet, Amazon, and Nvidia. Technology has been one of the market's strongest performing sectors over the past decade, helping NDQ deliver impressive long-term growth. However, because it's heavily concentrated in technology, it's generally more volatile than diversified market ETFs. If you're comfortable with higher risk in exchange for higher growth potential, NDQ is a compelling choice. Number 1. Vanguard Australian Shares Index ETF VAS. Taking the number 1 spot is the Vanguard Australian Shares Index ETF, or VAS. VAS tracks the S&P /ASX 300 index, giving investors exposure to approximately 300 Australian companies across banking, mining, healthcare, industrials, and consumer sectors. With a management fee of around 0.07%, broad diversification, and a long track record, VAS has become one of Australia's most popular long-term investment ETFs. While it doesn't provide international exposure like VGS, it remains one of the strongest core holdings for investors building a diversified Australian portfolio. Number 5. iShares Core S&P /ASX 200 IOZ. Number 4. BetaShares Australia 200 A200. Number 3. Vanguard MSCI International Shares VGS. Number 2, BetaShares NASDAQ 100 NDQ. Number 1, Vanguard Australian Shares Index ETF VAS. If you want broad exposure to Australian companies, VAS and A200 are excellent choices. Investors looking for global diversification should consider VGS, while those seeking higher growth may prefer NDQ despite its greater volatility. Remember, this video is for educational purposes only and shouldn't be considered financial advice. Always research an ETF's objectives, fees, and risks before investing. If you found this video helpful, don't forget to like, subscribe, and turn on notifications for more investing and personal finance content. Which Australian ETF is your favorite and why? Let us know in the comments below. Thanks for watching, and we'll see you in the next video.